Graph FX here. So today I'm going to be talking about liquidity and how you can use liquidity in your trading, how to actually use liquidity in your trading, right? So we're going to be going over some concepts. The first of them would be how to spot liquidity. That's the most important thing. First of all, is how do you find liquidity, right? Then how do you trade? How do you take that to your advantage? How do you use that to your advantage in your trading, right? So first of all, let's go over how to find liquidity, right? I'm using this pair NZD card. Shout out my followers on Instagram who recommended pairs and the questions. Okay, so NZD card is what we're going to be using here. You can find liquidity on any pair by simply looking at key levels of support, key levels of resistance. This is the daily time frame, right? I just want to use the daily time frame. You can do this on any time frame. You just need to find those key levels where prices have been respecting, because what this is this is a supply zone. And what a supply zone is a supply zone is an area where sell orders are generated. So we've seen price, look at this, 0.9, right? We've had a sell-off, we've had a sell-off, we've had triple sell-off. So you can see that this is a supply zone. If you had noticed this, you can say, okay, if I do see price fall from here, then it could be good to target the downside, right? It could be good to target the downside. Looking at another area of demand, let me mark out this. Look at this area I marked out here. It's up price. Let's look at the course. What price is 0.86800, 0.86, 0.87. We had one drive into this, push up, one drive into this, push up, one drive into this, push up. So you can see that this is an area where this is a demand zone or support or whatever people call it, but this is generally where orders were generated, long orders were generated. So seeing as we have levels of demand, levels of supply, right? These levels also do become areas for liquidity to target, right? You can see this resistance we had here also, 0.88500, tested once, twice, 3 times, 4 times. You see the drop, right? Push up, push up, push up. If we do take our Fibonacci, let's take our Fibonacci real quick. From this low to this high, we see our 61.8 level, right? We see the rejection of that, boom, into the demand zone, we push up, boom, into the demand zone, push up. So let's say someone took a long trade here, right? Let's say someone took a long trade here, and this is their stop loss, right? And they targeted this level, right? Now, do you see how liquidity works? We've hit our target, but look at where price run the stops, boom. There are always going to be stops below these levels, right? There's always going to be stops below these areas of demand. When the market creates an area of demand or area of supply, there's always going to be stops above, right? Because when they're coming up money from here, because that's liquidity is you generate liquidity in order to take price in the opposite direction. So in order for them to sell this market, they have to create demand. When you create demand, excessive demand, then you shorten supply, right? So you take trade from a demand zone into a supply zone, and then you come back to purchase liquidity. You create that liquidity, which we can see in terms of like stop losses, where the stop losses go. Let me show you another example. Let's say we took a short trade here. Let's say we took a short trade here, put our stops above that, and we're targeting this low, or let's say we say this demand zone, right? I don't even want it to seem like it's a losing trade. Let's say this is the trade, boom, into this demand zone, and then you see price. What does it run? It runs this stop, taps into this psychological level, and then dumps. So same thing applied here. This is another supply level, and let's say we get a trade, or let's say this is a trade 1, this is a trade 2. Let's say this is another trade, but for the sake of completed trade, let's say this is a trade. Right? Now, where are the stops of this trade? Where are the stops of this trade? Up here. So if price does eventually run up here, we'll be looking for these stops to be run as well. So we'll be looking for a breakout to the upside because we do know that there are stops above there. So this is how we're able to find liquidity. If we look at these key levels, we do know that at a point it's going to be broken, right? So once you have these key levels, support, resistance, even with your trend lines, right? We have price moving on an uptrend, and now we have a break of that trend line. We have a supply zone that has been created, right? Now we do have these lows. This was the previous high, this was the low, this was the high, right? Now this high, this low, look at 1, 2. We could see price coming for a third time. This is a demand zone, right? Because this is where price has been generating buyer. You see price coming to here again. We failed to make a higher high, right? Which means this downtrend. What we could see is we could see this liquidity, this level of demand tested again. And since we know that stops are obviously going to be below this level, that means the liquidity, there's liquidity to the downside, right? This doesn't mean that there's only liquidity to one side. As I've also pointed out, right, there are stop losses above here, which will create liquidity. Same as above here, same as above here. What we want to see is when the market is coming, when we do our analysis, what we're trying to predict is, okay, is the market going for this stop run at the moment, or is it going for this stop run at the moment? If you look at these two levels of, or these two areas of liquidity, you can see that it's easier for the market to claim this than to claim this. Not saying that the market cannot push up, claim this, and then fall to claim this. But at the moment, it's more logical for the market to claim this liquidity to the downside, take advantage of that, and then push the price to take advantage of this liquidity to the upside. All right. So looking at NZD card right now, if I'm to say where do I feel price could most likely go to, I would say maybe to the downside, right? And if we are saying, okay, this was a daily trend line that has been broken, right? If this was my trade to the upside, again, this does, look at this trade. Let's say this was the lower high, right? Let's say this was the, I said the lower high. Let's say this was the higher low of this trade. Let's look, we're looking at a trend line now. I'm just breaking out the trend line as it is. So this is, let me use this because this is a better test of the trend line. And let's say our low is, our stops are below here. And let's say this is the trade. Let's say we cut this trade. Now that price is fine, has broken the trend line. We are seeing signs of bearish momentum. Where do we think, where are the stops of this trade? The stops of this trade is just below here. So even if you've not taken profit of this trade, now this is where it stops. This is where they're going to close out people, right? Now look at this again. We have another buy trade. Let's put our stops on the same zone. We have another buy trade, you know. Now this did not continue the trend the upside, right? And we didn't even break this previous swing high, right? So what we are going to be looking for is, this is giving us an idea of, okay, maybe price wants to seek the liquidity below here, seeing as it's failing to make new highs, right? Now, if we do get another retest of this zone, of this level, we're going to see people also try to come in like this, right? So this is the retail mindset, right? We're also going to see people try to come in like this. And I'm not saying that you're not going to make money. I'm just telling you, where is liquidity, right? Liquidity is just below this level. So when you see price making these runs, you can predict, okay, there's going to be a liquidity run because there's going to be stops below here. If I place my trade like this, there's going to be stops below here. So seeing as this level of demand is no longer going to make, or doesn't seem to want to switch trend to a bullish trend, then the liquidity below here could be sought after to then run price in the opposite direction. In order to create take that buy, they need to create sellers and have sellers trapped on the other side of the market so that liquidity is to the other side of the market. So this is how we're able to spot liquidity, and this is how we're able to take advantage of liquidity, right? So if someone is looking to take a trade like this, they have to induce people to say, okay, you know what? Maybe this trend is changing. They need to induce people to be like, I see a switching trend to a bearish market. So people want to see a bearish market when they see a breakout like this. They're like, okay, if we get a breakout to the downside, then what we should be expecting to see is a break and a retest and then the continuation. But what they'll get is a break to the downside, a retest, a push to the downside, push up, push down, and then seek the liquidity to the upside. So this is how we're able to spot liquidity, right? It's just a matter of where your stops are or where stops are in general, because stops are going to be above levels of supply and they're going to be below levels of demand. So whenever you see price making those runs for those, just imagine yourself as a retail trader. How would you be approaching this trade? Where would your stops be, right? Even if you do take this trade and you do make money on it, you can still say, I know stops are below here, and you're still going to make money going to the downside, right? That's just basically how this market works. And if you look, stops can be below so many places, right? We have a trend line here, which means there are stops below this low, there are stops below this low, just as there are stops below this low. Because when buyers get in, they want to put their stops below the previous swing point or the previous lower swing or previous higher swing point, right? So this is just a quick breakdown. And you see, I stuck to the day time frame. I just stuck to the day time frame, right? But you can do this on any time frame. You can look at this information on any time frame. Look at these levels of demand, look at these levels of supply, your support, your resistance levels, right? They're always going to get run. So this is an easy way to spot liquidity. Is highs and lows, highs and lows, highs and lows. Then you need to look at which is easier to claim for the market in order to move price in the opposite direction. We know people would love to buy from here, which means if it's an obvious level that people want to be buying from here, we do know that liquidity should be resting below here. So we are looking for the setup that are going to take price in that direction. And we do have a setup here. We do have a setup here. We do have a level where people are trying to go long, right? If someone is trying to go long here, stopped out. If they say they want to re-enter this market, let's say they see this bullish close back above the level, right? This is still what their trades will look like, right? And now we have this supply level, right? And what we could see is price going for their stop losses. So I'll end this video here and I'll see you guys in another free lesson. So I hope you guys can take away something very, very vital from everything I've explained here. It's been a lengthy video, right? But hopefully I believe that I've been able to like some sort of information to you guys on how to use liquidity. And also I've also given a kind of an insight into where I feel NZD card might be going next week. So let's keep an eye on NZD card. If NZD card does play out, if the setup does play out actually, then you can see in live markets how the market can actually seek liquidity and how you can be using that to your advantage in trading. You don't really need to know too much of all the fancy stuff. Once you know where the liquidity lies, then you should know, you have an idea of where the direction of the market is, and you're better off than 90% of the traders in the market, right? So I'll end this video here and I'll see you guys next week. Peace out.